Australia's key inflation figure is due out in just a moment's time. It could be the key to decide whether official interest rates are raised by the Reserve Bank during this election campaign. Our business editor Ross Greenwood is eagerly standing by to wait for these numbers as they drop. Ross, while we wait for that to happen, what is the expectation in terms of what the markets are thinking will happen here?
Okay, so the headline number is the annual inflation rate, which in the last quarter was 3.5%. Now, markets are right now forecasting that that will go to 4.6%. And, of course, you know, the big issue of what happens with the Reserve Bank, if it even goes higher than that. Some of the forecasts are as high as 4.9%. As soon as it drops, we'll let you know what that number is. The actual quarterly number, which goes to the end of March, will be 1.7% as the forecast. And, of course, we know that food prices... So here it is now. The annual inflation rate, much higher than forecast, much higher than expected, is 5.1%. So this is significantly higher, Ash, than what anybody has expected. 5.1% is the annual inflation rate. As I said, it was expected to be 4.5%, 4.6%. It has come in at 5.1%. This puts enormous pressure. So even the quarterly inflation rate, which I told you was expected to be 1.7%, has come in at 2.1%. Now, there'll be key areas that the Reserve Bank will now be watching as a result of this. It'll be watching things such as what were some of these factors that actually caused this to take place. We'll take you through some of the issues here. Effectively, what they're saying, the most significant price rises were new dwelling purchases by owner-occupiers and also automotive fuel. So we're talking petrol prices here up 11% year on year. So as I go through and just have a look at some of the other bits and pieces here that have affected this inflation rate, which is going to be significant in terms of financial markets, is going to be significant in terms of what takes place. There has been things such as food up by 2.8%, you can see. There's also other things, transport, fertiliser, packaging, ingredient costs. Vegetables are up by 6.6% during this period of time. Even waters, soft drink and juices up 5.6%. Beef up by 7.6% during this time. So what I'm really painting a picture of is what you're feeling, what I'm feeling, what everybody's feeling, is that prices are rising. It's now up to the Reserve Bank to react. The Reserve Bank previously had been anticipated to wait until after the election before it raised interest rates, to not raise interest rates until June. This number today will put enormous pressure, Ash, on the Reserve Bank to raise interest rates next week in the election campaign in May, and probably, if it was really doing, you know, sort of what many in the markets think it should do, to raise rates by 0.4% first off, to get that cash rate up from 0.1% to 0.5%.
This is quite a shocking figure, isn't it, Ross? I mean, I think anybody in charge of a household budget will be very aware of some of the figures that you just went through, that groceries are going up, that petrol is going up, that the cost of living is going up. And we've been hearing a lot about that from both sides of politics throughout this election campaign. If this happens next week in terms of the Reserve Bank meeting, raising the cash rate during an election campaign, that is a big deal in terms of the political messaging we'll see from our leaders. I remember interest rates rising during an election campaign. I think it was back in 2007, John Howard versus Kevin Rudd, and it really did spin the dialogue we were hearing from both of the leaders. It well and truly became about the cost of living, and you'd expect this will happen again.
I don't think there should be any surprise that there are interest rates coming. It's the urgency with which they're coming, and which with the Reserve Bank has had to change its attitude towards raising interest rates. And indeed, it thought that this inflation was just transitory. It was just passing. What this is showing is it's rusted on, and indeed it needs dealing with from the central bank, which means raising those interest rates. It can't get too far behind the curve. Other central banks, we know in New Zealand and Canada, have already raised interest rates by 0.5% at their last meetings. We know that the US Federal Reserve in May is expected to raise interest rates by 0.5%. So here are some of the keys here that will be around the place. So we're looking here at, say, the headline quarter-on-quarter rate, as we said, is 2.1%. The year-on-year figure, 5.1%. Now, the one to watch here is the trim mean year-on-year. Now, that's now burst out of the preferred 2 to 3% band that the Reserve Bank has got. The fact that that's gone to 3.7% now says that the Reserve Bank needs to start to act about this. Now, it did anticipate that inflation would go outside of its preferred band of 2 to 3%, but the fact is it's burst through it and burst through it very quickly. The second thing I can also tell you, Ash, is that there's been an immediate reaction on the markets, even in the last couple of minutes that we've been on air. So the ASX 200 had been down by around about 50 points when we went to air before this number, now down by 77 points. The Australian dollar is stronger in the anticipation of higher interest rates. Money market interest rates right now, just having a quick look at the 3-year bond yield. 3-year bond yields pretty much the same as where they were previously. 10-year government bond yields, again, pretty much where they were. So some things have moved, some things haven't. But the reality is that what this number is telling us today is that the chances of an interest rate rise as soon as next week, right in the middle of the election campaign, and with both sides really bargaining on their ability to manage this economy, I think that that's going to be something that clearly will change, if you like, the focus and the nature of the debate inside the election this year.
And Ross, just to break it down for us in terms of people sitting at home, they've got a mortgage, thinking about what this actually means for them going forward. Of course, we haven't had to deal with this for some time now in terms of interest rate rises. So assuming that an interest rate hike does happen again next week, then I guess we go through the rigmarole we always see about banks passing that on and what that means to mortgage owners.
No doubt, but the banks will pass it on. There's almost no doubt about that. So in other words, the interesting part about this is while families and business are actually coping with what we're seeing here on the screen right now, transport costs up by 4.2% in the past quarter, housing costs up 2.7%, your health costs up 2.3%. So all of the rising fuel prices and the supply shortages are coming right through our economy. You can see it here now. But the reality is that families and businesses are now going to have to cope with higher interest rates. And remember, Ash, we're not talking about one interest rate rise. We're talking about 6 or 7 or 10 interest rate rises that are come over the course of the next 12 months. In fact, money markets right now are basically suggesting that interest rates will rise every time the Reserve Bank meets, pretty much between now and Christmas. They might take a break at some stage around about October for a month or so, but broadly there are interest rate rises coming all the way through. Money markets anticipate a 44% chance yesterday of a May rate hike after this number today. When that comes out tomorrow morning, that'll be more like 60 or 70%, I would suggest to you. So that is the urgency with which these rates are going to rise. And indeed, it means that households are going to have to really gird themselves and their finances to know that they're not going to be paying in 12 months' time 2% for their mortgage. They're more likely to be paying something along the lines of 3.5 to 4, even 4.25% for that same mortgage.
Ross Greenwood, we appreciate your analysis as always. Thank you so much for joining us to take us through all of that and what it means for people sitting at home. We're going to also be hearing from the Treasurer, Josh Frydenberg, shortly. He's going to be holding a news conference next hour. So it'll be really interesting to see the Treasurer's take on those pretty extraordinary figures out today.